Hi, I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver in January, and I'm joined by Bill Sheriff of enCore Energy. Thanks for being here in what is just a slightly busy time in the uranium space.
Yeah, no doubt. Thank you so much for having us.
Absolutely.
Really great crowd.
Yes, it's been fantastic. A lot of interest in the uranium session that we just had. There's all kinds of things we could talk about. We'll get to some uranium market comments at the end. Let's focus on enCore to begin with. The angle I want to take here is you announced what I thought was a really smart transaction with Boss Energy just a month ago or whatever it was. That to me looks like it's just allowing you to accelerate the plans that you have to get more production, U.S. production, which is like the thing everyone wants. Yeah. So let's talk about that deal a bit.
Well, I'm glad you recognize that, because that's exactly what it is. For a long time, we've been very heavy in the M&A space, and yeah. I would consider this a similar transaction.
Yeah.
We'd been in contact with Boss for quite some time, looking at a variety of different scenarios. Yeah. And we were comfortable at the level of a minority interest in Alta Mesa for the right price. And that's why we ended up doing a $10 million private placement, as our needs were $70 million.
Yeah.
They were willing to pay 60 for the 30% interest, which was about a 75-85% increase in 11 months from when we bought it.
I mean, this is what's cool, right? You only bought it 11 months prior, and you managed to crystallize a significant gain by doing this deal. Yeah.
And importantly, it gave us enough cash proceeds to where we could accelerate our production. Mm-hmm. Obviously, by giving 30% of it or selling 30% of it to Boss, that's going to impact the production. But not really, because we'll be able to spend more money getting more drill rigs. And once you've got a capacity of an in situ plant, your really limiting factor is the drill rigs. I mean, there's several others, casing and plumbing and metering and things like that. But really, your biggest one's drilling.
Yeah.
And so with that extra money, we think we'll be able to put enough drill rigs to work during 24, which is our startup year, coming here in April or May, somewhere in that vicinity, to where our 24 impact will be minimal. Over what we would have done by ourselves, by having that extra cash, because we can put more drill rigs to work and accelerate that production. But so we think 24 is going to be more or less what we would have had on our own, but 25 is where it really kicks in, because we've been having to go hand to mouth since we started this, and pretty ambitious, putting two things into production within a 6-month time frame actually, and so we've had to go hand to mouth. We couldn't move multiple assets forward at the same time. Very well, and especially where that comes into effect is Rosita, which is a plant that's producing from the general property, but it's still far enough away to where we don't have direct pipelines, and we do the satellite trucking of the coated resin ion exchange beads. And that's the whole premise behind Rosita, is to feed that from multiple sources within a 100-mile radius of the plant. Although currently, economically, you could probably do it 500 miles from the plant. Sure. But we've got a number of resources in that area. In fact, all of our current Texas base is within 100 miles of Corpus Christi. But what that's allowed us to do is, in particular in our Upper Spring Creek project, there's two pieces of it on opposite sides of the road. Okay. We were going to take one of them and move it forward to production.
Right.
Now we're able to take both of them and move them forward to production at the same time. Yeah. It's one of those things, there are very few engineering problems that can't be overcome with a large sum of money. Yeah. So, and rather than, we didn't really want to go out. We were heavy in the markets last year to make the Alta Mesa transaction. We didn't want to have to go back to the markets again with another financing and issue more shares. Yeah. So this is a form of internal growth, if you will, or organic growth. But it really allows it, and you see it all the way through our portfolio, even into the Wyoming and South Dakota assets, is it just gives us the flexibility to move those forward.
Yes.
And, even 6 months forward on a project, or more importantly on those satellite ones where you can bring a whole separate project forward, makes a huge difference in terms of your cash flow and the profit potential.
Absolutely. And of course, this is U.S. uranium production. And, my angle when I'm talking to investors who are curious how to get positioned for this uranium market, I mean, the most obvious exposure to take is growing U.S. production. And now enCore is sort of a leader in that. So why don't you just, for those who aren't so familiar, do you want to talk about why the U.S. production growth angle is so important?
Well, it really is, and it's endemic to most of the industries in the U.S.
Yeah, it's true.
We've outsourced virtually everything, other than high tech, I guess. Yeah. And that ends up getting outsourced as soon as something new comes along. Yeah. But the U.S. is the world's largest consumer of uranium for electricity generation. And it's 48 million pounds a year. It'll be up to 50 before long. It will get eclipsed by China in the next decade, but nonetheless, right now we're the biggest consumer. And yet we produced 2 years ago 9,000 pounds. 9,000 pounds against 48 million. So in essence, zero.
Yes.
And last year, 200,000 pounds.
Right.
So this year will be maybe another 300,000 or something, because we're starting up, and another company, started up in the summer with an operation in Wyoming. But still, it's a drop in the bucket.
Yeah.
Now, installed capacity of plants in the U.S. is plus 20 million, 20 million or more pounds.
Sure.
And we're going to see that come on, but as demonstrated, even if you're in the best jurisdictions, Texas and Wyoming, it takes a while to get going. A year and a half in Texas was unusually quick. Typically, you're 2 to 3 years in Texas or Wyoming.
Yeah.
So these things are going to take a while to come on, and we've been working on it a while. But it's going to be a while till we get there. And the real key is, of that 50 or 48 million pounds, almost all of it obviously is imported.
Yeah.
Everybody goes, well, what about Australia and Canada? Well, that's where about half of it comes from.
Yeah.
The other half of it comes through the port of St. Petersburg, Russia.
Yes.
Which, while Russia doesn't produce, but maybe 10% of that 50, they control the shipping. All the material from Kazakhstan either goes east to China, or it goes west through St. Petersburg.
Yes.
And right now there's a bill in front of Congress. The House has passed it. The Senate has it held up on a technical issue, having nothing to do with uranium. It's a fight between two of the senators.
Yes, it's a silly thing.
And that'll get resolved shortly.
Okay.
And so I think there's a very high likelihood, no certainty, but a high likelihood that the U.S. is going to pass the ban on Russian nuclear material, uranium, enriched products, all of that. And they are going to give an exemption for utilities over a 5-year period. If they just can't find the material anywhere else, they'll be able to get a permission slip to buy Russian material. But I think if we do that, I think there's a better than 90% chance we'll do that. I think there's a better 90% chance Mr. Putin's going to say, that's a great idea. Why don't we start tomorrow? Forget about the 5-year thing.
And no exemptions, just no uranium
no more
for you.
Yeah. And so I understand why they're trying to ban it, but it's somewhat cutting your nose off to spite your face.
Yes.
It's going to create definite uncertainty and repercussions throughout the fuel supply chain. But I think there's a high likelihood of that. And if that happens, all bets are off. Clearly, the U.S. was self-sufficient in 1980. In 1980, we had 22 mills operating. We produced 45 million pounds of uranium.
Wow.
And with the Cold War ending, our buddies Russia can take care of this at $6 a pound instead of 30 or 40 in the U.S. What a great idea.
Yes.
What could possibly go wrong?
Yeah.
And now we're starting to know what could go wrong.
70 years of geopolitics, and now it's...
Now we know what can go wrong. So we're going to take it's probably going to be 10 years until the U.S., at the most optimistic, could be self-sufficient. Yes. And it probably won't happen. But even to get that half filled would be really ambitious in 10 years.
And in the meantime, there's just going to be a lot of price pressure. And that'll involve volatility and uncertainty and whatnot. But the pressure on the price, I mean, there's only one outcome from not having enough domestic uranium or friendly uranium, if that's what you're required to have.
Yeah, and historically, it's not unusual for the uranium market. For many years during the Cold War, there were 2 posted uranium prices.
Were there actually?
In the world.
Oh, I didn't know that.
One was Eastern Bloc and one was Free World or Western Bloc.
Oh, interesting.
For years, there were 2 prices, just like Brent and West Texas Intermediate.
We're absolutely going back there.
So we're going back there. And so the mechanism is not unfamiliar for those that have been in the business forever and a day.
Interesting. Well, enCore is very well positioned for that, for exactly this opportunity. And that's been many years in the making. So congrats on getting to where you are.
Thank you.
I certainly look forward to keeping up with the company over the next year.
We'll get some very ambitious growth and the right people to get it done and the right projects. So thank you for making time for us.
Absolutely.